So Jimmy, what did you think of our open house?
No, I thought it was great. Everybody who came seemed to be impressed, with the layout, and I don't know, it was overall really good open house. There's some of the stuff, the questions though, they kind of the typical that I'm hearing from people all the time is they're concerned about the prices, and they're also concerned about the interest rates. And I guess it's actually really promising for both, because we're pretty sure that the just because the basic supply and demand, the prices are not going to dip like 2008. It was a completely different environment,
because we have a totally different environment. That was an era when there was stated income, stated loan, stated docs, everything was stated, and there were a lot of teaser rates that went up very quickly after that, interest rates. So there was negative amortizations. Everybody was given a loan, whether they qualified for it or not, really. And so ultimately, when people couldn't make their payments because the interest rates increased, we had a huge problem. But this time around, I know people are talking about a shortage or anything, but it's not really going to happen, because, at least we don't think so, because the situation is totally different.
Right, and from the building perspective, is in 2008 our builders weren't thinking, and they were overbuilding, and so we had a home supply relative to what we have today, which is actually the exact opposite. So for Los Angeles County, actually have a shortage of over 400,000 units.
Right.
So that means that
so what
we're not going to
happens when we have the supply and demand ratios going on?
It's just basic high school macroeconomic supply and demand.
Right.
Low supply, high demand. We have a little bit of a lower demand right now just because of interest rates, but as soon as interest rates come back down, which they should, then we're going to have the same demand, if not higher, and that's going to continue to push our prices up. Just really basic supply and demand.
Right. So right now is probably a really good time to buy, because the interest rates, we could still get lower interest rates with different loan products. And there's always different things that we can do with the loans. And the thing is that, I don't know if everyone realizes this, but the prices are going to continue. It's been forecasted that the prices are going to continue to rise. So I know back in March 2020, everybody was waiting for the market to crash and all the houses to plummet. But actually just the opposite happened, and we were so above asking price back then and in the last couple of years.
I think, we had double-digit appreciation in both 2020 and 2021.
Right.
So, and this is when people predicted that the sky was going to fall because of COVID, and the exact opposite happened.
Right. So never follow the herd. Go against what the herd is doing, because that's where the money lies and that's where the opportunities rise. So thanks so much for joining me today, Jimmy, and I'll see everybody in the next video. This is Clara Duran Reed with the Duran Reed Firm Realtors.